Xenophobia is rearing its ugly head again from the same country it did about 7 years ago, South Africa. Could it be that the country has not quite dealt with it? We delve into that. Hello and welcome to Global Business as we bring you the latest developments on the business front. I am Penina Karibe in the Kenyan capital, Nairobi. Wherever you're joining us from, welcome to the show. Also coming up, Zambia and Zimbabwe fight to keep mining companies in their countries while seeking more revenue through higher taxes. And Egypt readies to host its Friends Conference in March. Newly elected Zambian President Edgar Lungu has directed the government to promptly resolve a row with mining companies over new royalties and VAT refunds. A statement from the presidency on Tuesday said the finance minister would discuss the issues with mining companies this week. The simmering disputes over taxes have threatened investment in Africa's second biggest copper producer. Resolving the tax issue is not only crucial to the future path of Africa's fastest growing economies, it could also be key to securing victory in the 2016 presidential election. Voldi Carolso reports.
Many in Zambia are skeptical about President Edgar Lungu's announcement to maintain a new mineral royalty tax, despite fears that it could lead to mine closures. After securing a narrow victory in last month's presidential poll, Lungu was inaugurated on Sunday. He had focused on tapping into the grassroots support base of former leader Michael Sata, who died in office. According to Lungu, the introduction of a mineral royalty in place of a corporate profit-based tax as the final tax is meant to ensure that mines pay the right taxes. Mining is the motor of one of Africa's fastest-growing economies. It accounts for 12% of gross domestic product and 10% of formal employment in the country. Africa's second biggest copper producer hiked open-pit mining royalties to 20% from 6% and underground royalties to 8% from 6% in its 2015 budget, a move mining companies have said could cost 12,000 jobs.
Now they've introduced this mineral royalty on mines, certain mines, up to the level of 20%, which constitutes, if you like, a turnover tax, and does not recognize the true cost of production. And this has an effect of, if you like, making some mines unviable and threatening those mines with closure, such as Lumwana mine already in Solwezi, which is basically in distress. And when this happens, it means that, if the mines close, jobs will be lost. And I'm not talking about a few jobs here. I'm talking about thousands of jobs in an economy which is already suffering from high levels of unemployment.
The southern African country has averaged 6 to 7% growth as the mining sector boomed, but growth slowed to 5.5% last year, the International Monetary Fund says, and could ease further with the price of copper at a 6-year low this month.
I think that the conglomerates that are running mines now should not quarrel too much over this tax thing. We should be talking about equity, not only tax, but also equity. I would rather we see a situation where Zambians have a stake in the mines, in the sense that they should be able to place their shares on the Lusaka Stock Exchange, so that Zambians can have a stake, because the minerals belong to Zambians, and it has been shown already that Zambians can run mines, as was shown by ZCCM.
Lungu's plan is to also support small-scale farmers and create jobs to fight poverty and social inequality. But many remain worried that imposing new taxes may have a negative impact on the economy and the lives of ordinary Zambians.
The impact that it might have on our economy is that most of our fellow brothers and their parents, they might end up losing their jobs, so to say. In short, if the taxes be increased.
I think the government should just try to talk with the mines, sit down and then talk to them and see the way forward. At least try to make them stay, so that the number of unemployed people out there will not be increased.
With another election scheduled for late next year, Lungu will have little time to turn around a stuttering economy in one of Africa's most promising frontier markets. Valdi Carolsa, CCTV.
And staying with mining taxes, miners in Zimbabwe face a bleak future after a new regime of taxation was introduced. The taxes, one including ground rental fees and another on export of raw platinum, were mooted in the 2015 budget presentation last November and have now been gazetted to take effect from January. Mining houses say the new obligations could push them to the brink, as CCTV's Farai Mokutuya reports.
The capital-intensive extractive industry is hoped to provide the solutions to Zimbabwe's economic problems. But returns from sales of resources have been low due to depressed global commodity prices for most of the minerals Zimbabwe depends on. The government has now increased or introduced new taxes to shore up its revenues. The move has not gone down well with mining houses, who say the new obligations could push them to the brink. According to media reports on Monday, Rio Tinto-owned Muroa Diamond Mine, valued at $279 million, is contemplating shutting down operations after a 15% land rental tax was imposed. The company responded to CCTV's inquiries on the matter with a statement saying, "In terms of the latest position, we continue to engage with the government and hope for some positive outcomes from this process." The platinum sector is also reeling after government announced a 15% tax on export of unrefined platinum. Robert Mugabe's government wants platinum miners to set up a refinery in the country, but players cite energy supply constraints and excess refining capacity in neighboring South Africa as stumbling blocks to doing so. Now government is piling on the pressure, but analysts argue its efforts could stifle growth of the sector.
Are we as Zimbabwe prepared to see mines close because we have failed to engage? They must be compelled to sit down together and deal with it so that they don't then create a perception out there that we're out to punish investors. In any case, it's always bad to have a policy today and change it tomorrow. You're creating confusion at a time when we say we need FDI because we're bleeding as a country.
Zimbabwe's mining sector registered 2% growth in 2014, well below expectations, and is projected to grow by 3.1% this year. Farai Mokutuya, CCTV, Harare, Zimbabwe.
South Africa's government has been criticized for its handling of the recent looting and attacks on foreigners in the country's largest township of Soweto. Over 180 people were arrested and 6 people killed since the looting began on the 19th of January. The attacks were sparked after a teenage boy was shot and killed by a Somali shop owner in Soweto. Quiet has now returned to the township, but most foreign-owned shops remain closed. A task team has now been established to look into the tensions between local and foreign business people, as Sumitra Naidu reports.
The latest attacks on foreigners have reignited much debate among South Africans over foreigners living and working in South Africa. There's growing anger amongst locals who say foreigners are taking away their opportunities.
Yeah, I have the qualifications. I'm not working through those people. They're from outside. They close the gate. Most of the foreigners, they are the one who gets the job. That for 50 rand, 70 rand job, I can do it for you. But us, they don't want to employ us.
Violence targeting foreigners in South Africa first reared its ugly head in 2008, when over 60 foreign people were killed. According to analysts, the attacks never stopped.
We have to remember that in 2008 the violence did not stop. There's been ongoing attacks on foreign businesses, and so in a sense that what sparked this violence is an ongoing perception that foreigners are to blame for the hardships that South Africans face.
Government has been at pains to stress that the violence is as a result of criminal elements and not xenophobia. But the Minister of Small Business, who's heading up a task team to look into the tensions, has called on foreigners to share ideas and trade secrets to help local businesses.
The problem I have now is, where do we get the products? Because I buy at a wholesaler at cost price. Where do they get it? At less than cost price. So there's a problem. So if they can come to me and we can have a meeting and tell me to say, listen, this is the problem, this is where I get it from, then we can work together. You understand what I'm saying? If I sell a loaf of bread at 10 rand, they're selling it at 9 rand. So where the same bread, where are they getting it at 9 rand?
But some experts say that's not a fair request and is also not solving the issue at hand. According to research, foreign-owned businesses make a meaningful contribution to the economy.
I think it's a terribly unfortunate response. I think that will cost us economically. It will have a negative impact on us. But at this moment, perhaps more importantly, it sends an implicit message that this violence is justified.
There's been no new reports of violence or looting, but police say they will remain vigilant. Sumitra Naidu, CCTV, Johannesburg.
Sumitra Naidu now joins us live from Johannesburg for more on this. Sumitra, let's start from that point. Does that statement by the police that they'll remain vigilant inspire any confidence among foreign business owners?
Well, we have seen a more vigorous approach by the police this time around to apprehend those involved in the looting and violence and to further maintain their heavy presence on the ground to prevent further attacks. They have moved swiftly to stop certain perpetrators in the last week following the initial attacks in Soweto. However, having said that, most foreign business owners haven't returned to their shops. Many are still very fearful they will be attacked again. During the looting, there were several reports of police taking part in the looting, some police officers walking away from foreign-owned shops that were visibly being looted by local people. Apart from the recent incidents, the South African police has also been heavily criticized for being heavy-handed with foreigners. We've seen police officers arrested for violence, abuse and even murder, the most recent being the murder of a Mozambican national that was dragged behind a police van and subsequently died. So no, I doubt foreigners are feeling confident that they will be safe if they go back at this stage.
Sumitra, according to analysts, the xenophobic attacks, since we first heard of them in 2008, have never stopped. Why is the government seemingly unable to deal with this problem?
Well, you know, I've spoken to a number of analysts and researchers and looked at the various reports, and simply it points to government's lack of acceptance. These experts believe that the biggest issue here is government's failure to admit that there is an undercurrent of xenophobia moving across South Africa. There will be no solution unless the country's leadership admits first that this is a problem and a serious problem. So up until now, in terms of the latest attacks that we've seen in Soweto, no one in government or the police believe this is xenophobia. They have put the attacks down to criminal elements. They say it's pure criminality. So the experts are really concerned, considering that this is not new, that the attacks are really a flare-up of an existing xenophobic problem in this country. If it is not dealt with as such and there is no proper leadership on this, the situation is likely to get worse.
Sumitra, we'll be coming back to you in a bit, but first let's listen to some reactions from the Somali capital, Mogadishu.
It is well known that South Africans kill and mistreat Somali businessmen there. Truth is, we never expected that from South Africa. In the days before the civil war, Somalia helped South Africa so much by way of training and supporting its independence-seeking movements. So this is not a way to reward a friend. South Africa should at least treat Somalis with dignity.
Somalis are entrepreneurial, they are good businessmen. If South Africa did business with them and not rob or kill them, both sides would have benefited. Besides, South Africa remains the beneficiary of business in that country through taxation and job creation.
Well, let's go back to Sumitra Naidu, who's still live for us in Johannesburg. So, Sumitra, listening to those views, Somalis in South Africa believe they're a target of these attacks. Yet the truth is, foreign-owned businesses do make a meaningful contribution to the South African economy. So, what policy changes are being proposed to create a working balance between interests of South African businesses and foreign-owned businesses?
Well, the small business minister is currently traveling to townships in the various provinces across the country to see what's happening on the ground, to speak to locals and foreigners. The minister is heading up a task team to look into these attacks and the tensions and look for ways to better integrate foreigners into these communities so that they work alongside local business people. As we heard in the insert, the minister said foreign business people must share their knowledge and help local business people to be successful. She also noted that South Africans are still struggling as a result of poor education under apartheid. There's been no proposals put forward as yet, but we understand that the granting of business licenses and better regulation of small businesses and informal settlements will be closely monitored. The business minister also wants to have more integration of foreign structures when they do have meetings around small businesses and when they do have meetings around the economy. Above that, government is looking at tightening immigration laws to limit the number of foreigners entering the country. There's an estimated 50,000 Somali nationals living in South Africa. The Department of Home Affairs accepted over 800,000 asylum seekers between 2008 and 2013. So this is apparently being reviewed. Several recommendations, though, were put forward by the Human Rights Commission after the 2008 attacks, but the Commission says there's been little implementation of policy in that regard. So it's really wait and see in terms of what new policy will come up after this task team is finished.
All right, Sumitra Naidu live for us in Johannesburg. Many thanks, Sumitra. Well, let's have a look now at the markets. The South African stocks rose for the third straight session Tuesday, spurred on by investor sentiment that favored banking and mining shares such as Anglo American Platinum. Johannesburg's top 40 index gained 1.1% to 45,708, and the all share ended at 51,949, or 1% higher. You're watching Global Business. We'll be back after this short break with plenty more.
Sustainable development and a commitment to developing partnerships with Africa. Some of the key phrases already used at the Africa Global Business Forum here in Dubai.
There is a need for a predictable environment in which investors have to put their money.
Watching Global Business, welcome back. Now, Egypt is still suffering from the effects of 4 years of political instability that has affected national income, reduced its foreign reserves, weakened the currency, increased unemployment and budget deficit. The country is hosting an economic conference in March in a bid to attract foreign direct investment. Yasser Hakim has more on the preparations for that conference.
Egyptian officials are working hard to prepare for the anticipated economic conference known as Egypt's Friends Conference. The Minister of Investment says the government needs at least $55 billion in local and foreign investments to achieve a 3.8% growth. He said Egypt is targeting $13 billion investments from the upcoming economic conference. This requires extensive marketing, which the government assigned to specialists.
Stabilizing the currency is vital, reducing subsidies too, but the government already started, which is good. More important is to establish new investment laws.
Officials say over 2,500 people will participate in the conference to be held in Sharm el-Sheikh, 300 from the top companies and businessmen around the world. But there are major challenges. Experts say the investment climate is not business-friendly.
Stabilizing the currency and reducing subsidies is vital, and the government has already started, which is good. More importantly is to establish new investment laws.
The government says it's aware and will issue a new investment law, which it claims would be a catalyst for investments. The government will present feasibility studies for 30 major projects to investors, mainly in renewable energy, telecom, tourism, manufacturing, and health and education. The private sector will also be allowed to invest in the new Suez Canal project. The second challenge is security. Ongoing violence by the outlawed Muslim Brotherhood and militants in northern Sinai is a cause of concern, but the government has vowed to continue.
We're adamant to continue on our path of development. No one will stop us. No terrorism will break us. We will win. Our victory over terrorism is not only good for Egypt, but the whole region and the world.
The economic conference is seen by many here as a make or break for Egypt's economic development. In spite of the difficulties, Egypt is relying on its rich Arab Gulf nations that have offered their utmost support to the conference. Yasser Hakim for CCTV, Cairo.
And joining us live from Cairo to discuss this further is Ahmed Sufi Abu Taleb, an economic advisor in the Cabinet Office. Thanks, Ahmed, for joining us. So Egypt is preparing to host the Economic Summit in March, but the country is also experiencing violence. There was a bomb blast today in Alexandria. There were 2 explosive devices discovered at Cairo airport, and just last week, at least 32 security personnel were killed in Sinai. So how are you assuring foreign investors that it is safe to invest there?
Well, these events happen everywhere. It happened before in France in the last 2 weeks, if you remember. It happened in the United States. It even happens in China. And these events do not in any way disturb investments in any of these countries. They happen everywhere. And in Egypt, they are currently under control and under containment by the Egyptian government and the Egyptian military. And we expect these events to slow down as time goes by.
Ahmed,
so I see there is no fear whatsoever.
Right. So your country says it will present 30 different investment projects worth $20 billion at this upcoming summit. So which specific sectors will Egypt be selling to the investors?
Well, there are several sectors such as basically infrastructure. This is huge. There are many projects, and the Chinese and other countries could help in that. Suez Canal, many projects on both sides of the Suez Canal as a transit area for storing goods or logistics, and also for assembling goods to be further exported to the Middle East or even to the EU. Also renewable energy, solar energy and wind energy, cement projects and other manufacturing projects that I think the foreigners and the
Oh, I'm afraid we seem to have lost Ahmed there. That's Ahmed Sufi Abu Taleb, an economic advisor in the Cabinet Office, just explaining to us what Egypt will be selling to the investors in the upcoming economic summit in March that will be taking place in Sharm el-Sheikh. Well, so let's take a look at some commodity prices now. Oil prices gained for a 4th straight session on Tuesday as a U.S. refinery strike pushed up prices for petroleum products. Product prices have climbed in recent days, and concerns that a strike at some U.S. refineries would cut fuel production. Refineries also typically close units in February and March to perform seasonal maintenance, which can boost product prices. And still ahead, the untapped opportunity in Zimbabwe's growing internet space. Welcome back to Global Business. Now, internet penetration is growing in Zimbabwe as it is in many other parts of Africa. And although the economy is struggling, techpreneurs and experts say it is an untapped market opportunity. Wazir Hamsin with that story.
WebDev is a Zimbabwean IT startup. It was set up in the country about 10 years ago to tap into the growing ICT sector. WebDev runs 4 businesses: Zimbabwe's first online payment solution, PayNow, custom software development, web hosting, and the most profitable, an online classifieds platform.
Our target market is very much dependent on which of the businesses that we're talking about. We have our largest public-facing business, which is the classifieds business. It's a double-sided business model. So our aim as classifieds.co.zw is to provide a platform whereby consumers and businesses can search for products and services that they need or want on the internet.
Zimbabwe's online business is worth over $500 million thanks to internet penetration. The revenue comes from social networking advertising, e-commerce, as well as online ventures led by Zimbabweans in the diaspora and foreign entrepreneurs. Following its success in Zimbabwe, WebDev is now focusing on tapping other countries like Zambia and Botswana.
We enjoyed a lot of success when the economy could sustain the development of such big solutions. As the economic activity has kind of faltered in Zimbabwe, we're seeing less of those big projects coming to us for custom software development.
There are a lot of companies created in Zimbabwe that have an opportunity to reach out into markets because we had to solve problems here first because of not having those solutions available to us. I think the opportunity is huge, into the billions of dollars in value of business on the internet in the next few years to come.
Ndebele says the tech market will benefit from a concentration of skills and resources on particular needs in the market.
As technology providers, I believe that we can do better. And I think the where we are right now, although we have a bright future with a lot of the young entrepreneurs that are coming into the space, we still have the issue of specialization in Zim. Everybody is a generalist because they've needed to survive pretty tough economic times.
Zimbabwe is currently rolling out its fiber cable, which has led to more Zimbabweans, especially in the capital Harare, access internet. Wazir Khamsin, CCTV.
A space age shower inspired by America's National Aeronautics and Space Administration can save up to 90% of water. According to its Swedish developer, the shower's purification capsule instantly purifies water as it falls into the drain before pumping it back out of the shower head. The design has won several business and innovation awards and attracted investment from the likes of Skype co-founder Niklas Zenström. Its developers say the purification technology could be used in taps and drinking fountains in developing countries. All right, so let's take a quick look at the currencies before we go. In Nigeria's central bank said Tuesday it plans to sell $30,000 to each of more than 2,500 Forex Bureau operators on Friday in a move to increase dollar liquidity. The bank is trying to narrow the gap at which the naira, hard hit by the drop in oil prices, trades on the interbank market through its irregular interventions and is also trying to curb speculation. Now ahead on Global Business tomorrow, South Africa is expected to retain its position as the leading investment destination in Africa for at least the next 10 years. We'll have the details. We'll also be looking at palm wine tapping in Cameroon and how a small village towards the northwest of the country is thriving from the trade. And that's it for this edition of Global Business. Remember, you can send your feedback to globalbusinessafrica@cctv.com. You can visit our Facebook page, CCTV Africa, and you can also stay in touch with Global Business on Twitter using the handle @CCTV News Africa.